Good morning, Predicted Trades family. Hope everybody's doing well. Move my mic a little bit closer so you can hear me. I'm going to drop a link in the comments here in the chat on YouTube for this Beast 4 tool for today. There we go. So, welcome everybody to Predicted Trades. I want to talk about this option that I've got in front of us because this really captures what this entire system is about. This is the 405 call on SPY for today's expiration, Friday the 27th. And we're looking back a whole week. In fact, we can look back even further. There we go. Just so that you can see on this particular strike on the 405 call for this Friday, it had a beast zone down here at about 50 cents down to about 35 cents, right? And it used to live much higher. Last Friday, after the lows we were setting last week, last Friday, this call hit our major buy zone, the beast zone that you guys have heard about. That's what this blue hashed and red hash line represent. Our beast zone is the major buy zone for any options contract. All of these other levels are just support and resistance based on where we open for the day. So when beast is way down below, we at least have levels to play off of wherever we open. But as these lose value, as all options do, when they get down to our beast zone, we see some amazing things happen. So we wait for that major buy zone, the beast zone, to start picking it up. The reason we're talking about this is yesterday we got a reversion to the mean, meaning ES, the S&P 500, got back up to the daily 21, which we'll look at in a second. But while we're looking at this call, which is the 405, that is where the daily 21 ended up landing on SPY. And last Friday, when it hits our beast zone, they loaded up, big money loads up at our beast zone, and then swings it over the weekend from 50 cents up to about $2, $2.30. The next day, it's back at the beast zone where they load it up again for about a 40 cents to $1.20 at the highs. Swinging that to the next day, it gets up to $1.30. Then they take it right back to beast, where they pick it up again for 50 cents, loading up late in the day to swing into the next day. That again goes 50 cents all the way up to 360. So big money, they got like a quadruple and then a triple and some doubles and another triple. And then they load it up for like a 7x, right? This is how big money works. This is how big money moves the market. via options contracts, right? The signature for the next move that they are trying to make is hiding in the options. So that's why we've built this entire system, the B system, to help us know what big money is doing, where they are loading up for what the next move might be, like a reversion to the mean. So this week on ES, if you're new, and even if you're not, please go back and rewatch the preps that I did every day this week. Every day this week, I was preparing you guys for a reversion up to the mean. On my chart, this stair-step white line is the daily 21. The orange line is the daily 15. The blue line is the daily 8. And as you can see, after last Friday, and setting new lows, it rockets up to the daily 8, and it fades back. Then up to the daily 8, and then it fades back. Then up to the daily 8, and up to the daily 15. And yesterday we opened right above both of them, gave them a kiss, and took off to the 21. This is what reversion to the mean looks like in a bear market, when we have been selling and setting new lows. To get back to the mean, we usually are going to have to pull up to the 8 and go a little sideways where they load, especially when we have nice big squeeze clouds in place holding price action back. We also had FOMC on Wednesday. They tend not to make the move before FOMC. They tend to load up and get ready. And as long as you have nothing out of line, no curveballs with FOMC, they just take it right on up and complete the move. So, congrats to everybody that hit this with us. We were playing the upside all week and cleaning up. I know some other services. I've checked in on kind of their morning preps, and a number of folks were saying, it's not time to go long. It's not time to go long. I'm not even going to play the upside. I'll just let it do a reversion and then I'll short. Well, folks, that's not how we operate. With our B system on the options contract, we know where to place risk. To the upside, to the downside, we know what to watch. So, I feel like we've had a pretty darn good weekend here, playing off of the bottom of squeezes, hitting calls, hitting some puts when it's time, when we're getting down to these squeezes and testing trend lines. Then we play calls again, yada, yada, and we got our reversion to the mean. So congrats, everyone. We push right through these squeeze clouds. They are firing up. And now, over here on the indices, we have bullish squeezes. If you buy my Professor's Tool Belt, you get my watch list columns, where I have these 30-minute, 1-hour, 2-hour, 4-hour daily squeezes so that I can track them in my grid. And these used to all be bearish, which is what these dailies still kind of look like, right? Because we're still just getting to the means. For it to be bullish, these lower time frame means have to, moving averages have to get above the 21. Then we'll be stacked bullish, and these will turn blue. But at the very least, our lower time frame squeezes that have been bearish and highlighted red or purple, they're now starting to turn blue. So, just kind of covering how the weeks went for the new folks. And now we can talk about what to expect for today. Let's take a look at this trend line, and if we update it a little, come on now. Yeah, I like that. Okay, so now we have gotten our reversion to the mean. we have some nice squeezes in place coming into open that are going to help let us know where we're going to find support, where we should find support, and where there will be some resistance. There's always the scenario that we chop around here at the 21, we stay inside these squeezes, and they just kind of trap everybody trying to go long for more move up and trying to go short to get back and just, chop and load up for the next leg next week. Meaning they could chop around the daily 21 while they're loading up calls or puts for next week. I'll start with the chop scenario just because we got a reversion to mean. We shouldn't be greedy and expecting a ton more, but should these squeezes fire to the upside, we have 4101 as our key level, which used to be low of year until May when we started sliding to new lows. If we get through 4101, this 4136.5 is very key, and this shaded zone around it is very key. This used to be where we were bouncing in the sell-offs back in January. Then we broke through it, and it became resistance, and we broke through low of year and started setting new ones. So now we're back to previous low of year, and we'll be testing this zone that used to support us. For the new folks, just to give you an idea, load up a daily to show you. Oh, don't do this toss. Whew, there we go. So our shaded zone is right there. And back in January, February, when we were selling off, even with the Russian invasion when it started, this zone allowed us to bounce and bounce and bounce and bounce. But then when we broke through, it became resistance. And we haven't touched it since about, back at the beginning of May. So, drop back down to our normal time frames for prep. If these charts are going to start doing this, I'm going to cut prep short. Because they were loading fine before I started prep. We do have economic data coming out today. Let me grab that and pull it over. We talked about this every day in prep this week. We have at 8:30 dropping a ton of economic data. Inflation, disposable income, consumer spending, yada, yada, yada. And then University of Michigan Consumer Sentiment Index and 5-year inflation expectations at 10 a.m. So we have some economic data dropping as I speak. And personally, I'm not even going to go look at the data. I just look at how are they reacting. It looks to me like they're fine with the data as we push right back up. If the data for the inflation that they just dropped was not favorable, they would have dumped it right down to the squeeze bottom, maybe even down to the daily 8. So, overall premise for today, looking like the economic data is not going to hold us back and we can keep trucking. Our first resistance is this squeeze top, then this 4101, 4136, and first Keltner up at 4165. Now, should we reject that squeeze top or that 4101, we can slide back to the daily 21, down to the squeeze bottom, and 4013, which is where POC was sitting for ES. It did move down, but I marked it and left it. If we do pull down to test POC, we have the daily 8 right here and a trend line from the lows of the week. So a whole bunch of support if we take a little dip to POC for us to come right back to the 21 and keep heading up. Should that support give out, then we will go to where POC currently sits, down at 39.30. Probably pretty quickly. But overall, it's looking like they want to go up. Watch the squeeze top. We know that they can take it there just to bring it right back and test something key. And if you're new to predicted trades or new to my preps, I'm always going to give you the upside, downside, sideways premise, right? I'm going to give you key levels so that we can visualize what it looks like. I say watch these squeeze tops because depending on where we open, we could go tap them, come back to the 21, giving you a dip buy, or even down to the bottom of the squeeze to give you a dip buy. But if buyers do not continue the move and we get down below where POC used to be, below the daily 8, we could fall quickly right back to where POC currently sits. So that's the premise on NQ or ES today. Let's move on to NQ. Oh, like I said, if it's going to act like this, I am not going to sit and wait. NQ. This 12,100 was basically our resistance once we sold off on last Wednesday and then into Friday, right? This 12,100 was the wall that we had to break through. That's where sellers were sitting. So on Monday when we got near it, I locked everything up. We got a gap down. I waited for the squeeze bottom and started going long again, right? Yesterday, we broke through that key resistance level, allowing us to go higher. NQ about to make it to the daily 21, has not touched the daily 21 in quite some time. Even the last attempt to revert to the mean stopped shy at the daily 15 and went back for new lows. So, NQ about to touch the mean and potentially get through our next resistance point at this 12,460. If we can get through that and keep on trucking, I do have a nice little zone up above where the first Keltner up is now cutting right through the middle of. So very clear upside target. Let's see, NQ up about 100 points. The 400 point. Yeah, we could get here today with, it might be a little bit more than 1 ATR, but it is possible. We will want to watch these highs at about 12,600. That will be what we need to get through to keep on trucking up to the first Keltner in the zone above. I expect we likely get to that high, pull back to this level and where the 21 is before we break through it and move up to the next zone. But we also always have to be prepared as we are testing a potential trend line. It is a higher time frame. I gotta jump to a different time frame to see where this comes from. And I'm not gonna do that because it's just taking time. Basically, if we can get through the squeeze top, and I believe a trend line from some highs on a higher time frame, get to this mean, get through it, and retest it so that it is support, we can keep trucking higher to test that 12,600. If NQ rejects the 21, very likely scenario that we should prepare for. NQ has been leading to the downside. They have been selling tech pretty hard. If the market is going to start heading up again, we need tech to get above the daily mean, the daily 21 here, and use it for support to start moving higher. But again, let's be prepared on a Friday after a good move and reversion to the mean that they might just chop us around. We could hit this 21, maybe fall back to the bottom of the squeeze, daily 8. We are at the daily moving averages. I like to refer to those as the liquidity areas. So we can just bounce around where liquidity is, where institutions load up at big moving averages for the next move, whether it's pushing off to the upside or back down. So let's read it today and see what they do. Let's use our squeezes as a guide. And let's not fight the trend. Big, strong trend up yesterday. Everything made it to the mean except for NQ. Big, strong move up, even on that economic data that came out at 8:30. So don't fight the trend. Be prepared for rejection and to pick up a put if we reject. Also be prepared if we keep going on a pullback to pick up a call, right? They're ready. All right, I'm just gonna restart toss and see if that makes this whole slow loading thing a little better. So just give me one quick sec. And if that doesn't make it better, then we're just gonna cut this short. Enjoy the trees. Don't stare at the sun, it'll hurt your eyes. Bear with me while I get toss loaded back up here. And for the new folks with the Beast 4, I hope you enjoy it today. Put that on every chart. On equity and on options, it should pretty much work. I grabbed, options so far in the money and so far out of the money for each and every ticker and included them today. So should have pretty much covered the majority of the strikes that you guys would go trade. If some were left out, definitely give me the feedback. I can expand the net that I throw out to grab all those options. But how we doing, folks? I mean, feel free to drop anything you want in chat, in the chat on YouTube, any questions or anything like that. Just looking over at where the stream is, it's like a minute behind me, so fun. And still waiting for toss to load up, so just give me a second, bear with me. Here we go, it's coming back. Come on, toss. There we go. Load it up. I believe in you. Loading, loading, loading. Hey, there we go. Come on. Hey, we're back. All right, let's move right through these. I'm going to try and speed it up a little since we've been waiting. The ready. Like I try to teach, the ready can kind of, not in a way lead the market, but it can react first. I talked about, let's see if the Russell can get above the daily 8 and hold it, hold it, hold it. That's a great sign that we're going to get back to the mean. And it got above and pushed off of it Wednesday. So we were ready. Now the Russell is pushing higher off of the 21. Let's see if it rejects the squeeze top at all and comes back to fill the gap. Right? We're having a gap up, so we do always have to be prepared for them to reject it at something and bring it back to fill the gap before going higher. So definitely be prepared for that. Also on the ready, it has about a 14-point ATR. It's up about, it has a 50-point ATR. It's up about 14 points. It can get back up to 1900, which is very key on the Russell. That is, again, like on ES, where we had support that held us up earlier in the year. 1900 is the key number on Russell to get above, to be back above the support that we bounced at back in January and February. So, very key. The only thing we really need to watch on ready, does it get through and keep on trucking? What does it do at 1900? And we may not get there today, but that's what I'd be prepared for. I like that at least NQ is trying to lead to the upside. It's very good. YM is above the daily mean and pushing higher, just like everything else. Let's see if it gets through yesterday's high. Gets above this squeeze top and keeps on trucking to 33,000. Big key level. And we have the daily Keltner, the first one, right up at that 33,100. Should we reject and fall back? Watch this trend line. If we cannot hold the daily 21, this squeeze bottom, and this trend line as they all come to meet, we could have a pretty nasty slip right back to the key level that we had to break through and turn into support to head higher. But overall, I don't know, this reversion of the mean, for me, feels a little different. But let's see if they let it keep going or if they bring it back and hang out at the 21 before heading higher. If they give out the trend line, going back. Now let's dig into each name. Apple held our key zone pretty much all week. Slipped it at one point to tag my next key level. Only 1 cent off. Come on, folks. And then back above our key zone at 138 and 138.8. They let it fade back so that they could pick it up at that zone and pick it up at that zone and open and pick it up right at 138 to trek back to 145 on a mission to get back to the daily mean and above 150. So let's see if Apple wants to keep leading. and push and fire this 4-hour squeeze to the upside. If it keeps rejecting the 4-hour squeeze, we could be coming back to test this 30-minute squeeze bottom at about 143 and fill the gap, looking for that to hold to send us up through the top of this 4-hour and back to the daily 21, which sits at 148. If we slip below this 30-minute squeeze, that probably means that the market is starting to slip below the trend line and we'll fall right back to this zone. But overall, let's see if they can keep us trucking. AMD. Talked about this week in prep. Go rewatch it. I said AMD looked relatively weak on the bounce of Friday. It did not get back near the highs when other names did. So AMD was not what they wanted to load this week to head higher. I said leave it alone, let it chill, and then it'll be ready to play. And what did they do? They just dropped it and let it sit till the market woke up. Then they took off from 90 to 100. So hopefully everyone left chips alone until yesterday. That was the time to play it. Same with Tesla. We'll get to that. Amazon. Oh, well, I'm sorry. I guess I didn't cover AMD. If we can get through this 30-minute squeeze and above 100, we are at the daily 50. We can push up back into this daily squeeze and this recent high of 104. Closed at 98 with a 6-point ATR. Can pretty much get there to test that high if it wants. Let's see if they want to buy chips today. Amazon. Look at this trend line. It is pretty sharp. And we talked about on Amazon this week in prep. Key level at 2100, 2050. They let it slip back. They load. They let it slip back. They load. And even on Wednesday, I said, Amazon looks ready. She led and led. She already looks like she just wants to keep on leading. So let's see if we can get back to this key 2316 today. Closed at 2220, 120 points. Oh, we can get there. Absolutely. Already kind of through yesterday's high. Let's see if market needs to take a dip or just keep on trucking. Amazon looking strong. We got the split coming after next week. So they might be taking this thing up. They might be taking it right back up. Daily 50's pretty far, but we can get there with a few days' work. Cat. Talked about in prep, anytime it gets near 200, get ready to go long. And we had a 2-day and a 1-day squeeze stacked on top of each other. It slipped 200 just to get to my key level, a previous POC, right back above 200, pushed off the daily squeeze. Now she's at 214. So Cat was a great trade all week to lead YM higher. We're about to hit the daily 50. We have we have the daily squeeze up above. So let's see if it can truck through the daily 50, get back to 220 where the daily squeeze resides. Facebook. We pretty much filled the earnings gap and now we're back near the top. Facebook closed at 191, 10-point ATR. Can get back to 201-ish. So keep an eye on Facebook. Could be a nice catch-up play to get back over this 195, back over the mean. And kind of settle there. we do have these recent highs that could slow it down and just, have it chop in that area. 193 is going to be very key. If it can't get through 193, Facebook's probably going to slip back. Maybe not as dramatic as 185. I don't think Facebook is going to engulf yesterday. If it does, that means that the whole market is rolling and giving up trend line. So there's a nice trend line here on Facebook. Draw it in. It will be intersecting this zone. So if market is weak and wants to go test trend lines from the lows, Facebook will vacuum down to here. Google, coming off that big old daily squeeze. And that 2088 key level. Let's see, closed at 2155. 80 points up from that. Getting to the mean today would be quite a push. It is possible if market continues looking strong. Google can play catch up. So, not bad. I mean, Google has been known to do this where it lags and it starts to make the move with the market and then it plays a nice catch up. So I'm going to have a little eye on Google today if the market keeps trucking. And it does have a split coming as well. It's not until July, so maybe why they're not loading it right now while they focus on Amazon, since its split is June 6th. GS. Banks getting up to the top of a daily squeeze. They have to push against it to open it up. And they're going to open up in it. So let's see if it just keeps on trucking to 330. That will start to open the squeeze up. It looks like we have a 2-day waiting right after that. But it can happen. It's also, not ideal to have all these squeezes stacked, because it could mean finance rolls back over. If that happens, we really need tech to lead, while finance grinds up into its daily clouds. JPM. Man, I hate you, JPM. From a daily squeeze bottom through the mean and above the second Keltner, or the first Keltner, almost to the second Keltner. This thing is trucking along. Let's see how it deals with this 30-minute squeeze. It looks like this daily is still slightly intact, but let's see if we can get above it and push off of it on JPM. Microsoft getting above the mean, getting back to a zone that I have. Not quite sure if that's a gap at the moment. It's been a while. But let's see if Microsoft can hold the mean at about this 267 and start the journey above 270. 270 is a very key level to get back to 275. If it rejects 270, probably rolling back to retest 265. Netflix. Not a big interest for me. It is still down at Keltner's. It is not back to the mean yet. So it's not trying to lead tech. It's just getting dragged along, right? It is getting, let's see, it's firing this, I assume, 4-hour squeeze since the daily's up above, yeah. So 4-hour squeeze is finding, it might play catch up to get to that 200 and the daily mean if the market keeps on trucking. NVIDIA. NVIDIA had that earnings drip, right? I talked about this. When they really want to sell something off on earnings, they blast right through these squeeze bottoms. They don't stop right at the squeeze bottoms and then start grinding back up. So that was a huge sign that this drop on earnings was just a chance to reload for the move higher. So even though earnings wasn't, the best, it was mixed, right? Some things beat, some things didn't. So overall, they took it down just to bring it right back up. It's already back at the daily mean. We just looked at Netflix, not at the mean. Nvidia is at it. So let's see if they want to load up. On AMD, we were getting close to a daily squeeze top. On Nvidia, we got room. It's way up at 205. So let's see if it can get through this squeeze top that it's already pushing through. If it can hold this 21. And if they just buy it up and get it back above 200. 13-point ATR. 190 is about 1 ATR today. So 190, 193 there. QQQ. Back above 300 and pushing through its squeeze tops already, almost to the mean. Let's see how it reacts there. And if we open and tap the mean, come back to fill the gap, right? Always got to be ready on a gap up for them to hit something, bring it back, fill the gap before heading higher. Roku. Not a real interest, right? I mean, interesting enough that they dropped it straight to the daily squeeze bottom, and then it's been on a just 45-degree, climb, right? Almost back to the mean. Yeah, not a real interest, but at least, it did set up a nice long, if you held through the week, almost back to the mean. Let's see what it does when it gets there. Shop till you drop. Again, relative weakness, not back to the mean yet. Can potentially play catch up, and Shop has a split coming at the end of June. And if they keep buying up Amazon, Shop can, on sympathy, be going up as well. It is e-commerce. It has a split coming. So let's see. If we get through this squeeze top, Shop could have a fun little rip. Let's see. Shop has a 40-point ATR. Yeah, it can totally get up to the mean today. So keep an eye on that. That's interesting that they held it back in this move up. And as long as market looks strong and keeps pushing, this could do a fun little catch up today on Shop. And yeah, if market rolls, things have made it back to the mean, and if market's going to roll over and fall, you want to pick something that's near the mean that's going to fall back. You don't want to pick something like Shop that has been held back, right? It's probably been held back because they're waiting for a fun move. If the whole market rolls today, Shop's not the one you want to short because it's not got so far to go. Whereas other names, if the market rolls over and gives up trend lines, they have more room to go. All right, I'm going to wrap this up because we're over 9. Snow, don't touch it. Yeah, don't touch it. They dropped, they brought it back. That'll probably chop. SPX made it to the mean, gapping up. Keep an eye out for this daily Keltner at 4160, at 4100, gapping up about 30 points. We're going to be close to yesterday's highs, maybe a little above, and that 4100. So let's watch 4100, 4890. If we get through those, we can get up to that Keltner today if we wanted to. SPY. Mean is at 405. We are already trucking up to my next level. that we didn't even tap before we sold off. Let's see if we can get to the 410 zone. SPY closed at 405, 10-point ATR. She can get up to that Keltner today, 415. Let's see how 410 goes. If it can get through and turn into support, 414, 415. Square. Baby Square's been beat up so much. Let's see how it deals with this 85.23. Key level that it stayed under, back under it. If it can get through 85.23 and hold, reversion to the mean at 86 and maybe higher, 9-point ATR, 83. She can go a little bit more, but no real interest there. Tesla. Tesla. I talked in prep this week. Please go back and look. On Monday's prep, I said 657, very key. If we're above that, you can go long. I wouldn't do it on a Monday, right? But at least I advised don't touch Tesla under 657. Let it chill, right? And even if I even said, like, I don't think this is a good short. It's already so beat up. It's near third Keltner. It's not going to tank much more. You can short it. But ultimately, when it got back over 657, it's time to go long on Tesla. And we got that yesterday. No, where's my other drawing set? There we go. We got that yesterday on Tesla. It pulled up and dripped right to our zone that needed to hold, gave it a tap, and took right off to the target of the day, which I said was 718. And as you can see, that key level I had at 718.84, high of day yesterday, so clean. Now we're gapping above it, needs to be support. So Tesla might take a little dip to 718, maybe a little further to fill the gap at about 707, right? See this low wick of pre-market that tested that level? If we're going to have a dip and the market have a little dip at open, watch for the 718 to hold. If it gives out, the 707 needs to hold. And then Tesla can move higher. Come on. There we go. Tesla can move back to that 744, very key level, and the daily 21, which is going to be around 760. Last but not least, Vixx. Let's be ready. Vixx, when it gets near 25, has been known to reverse, right? Just like when it gets near our key 33.5, it reverses. We wedged, and we have broken that wedge down. Vixx does have a big old daily squeeze right down here at 25. So if we're going to continue to the upside, Vixx is under 27. Want to see it stay under 27, 27.5. If it does have a little pop and we have a dip at open, want to see it stay below 27.5 and below 27. If it can stay below those and reject them, we're going down to that daily 50 at 26, let's call it, 25.9. If we can take that out, we're going to 25 to test this squeeze bottom, right? But if we get through 27.5, 28 and push off of them, market might be rolling over to test that trend line and through it, which would probably send Vixx north through 29 and back above 30. But overall, it's on the downtrend. Let's see if it keeps on going. Hopefully this was helpful for everybody. I'm going to end the prep here. We'll see you in the chat. If you're new to Predicted Trades and this is your first time tuning in, please go check out our website. There is a link to join our private Discord. Guess it's not so private anymore, but ultimately, come join us. do yourself a favor. We have cutting edge for retail. So, see you guys in chat. Good luck today.